All righty. Double checking what's been happening with traffic earlier. Pinhook and Jamela. Pinhook and Jamela was reported. Other than that, things are moving smoothly. Just make sure that you're buckling up and you're keeping it safe out there. My favorite subject.
It's also Chad Romero's specialty.
Good morning.
Good morning. The Tuesday Talker is here.
I am here.
You don't have headphones on, but ABBA, Money, Money, Money is playing.
Oh.
Which I imagine is
y'all do that
what
for me?
starts playing as soon as your feet hit the ground in the morning. Like, he turns over, throws the comforter back. And
it's like an 80s
money,
montage,
money,
right,
money.
Chad?
That's great.
Yes,
Must
isn't
be
it?
funny. Anyways, hey, good morning, Chad. How are you?
What you want to talk about today?
Oh,
Well-
it's so boring.
Well, okay, so let's just get up to reality, or come to reality about what has happened this week.
Okay.
In the stock market.
All right.
I think we're down the last 2 trading days, 1,800 points.
Yeah.
However, the percentage isn't even in the top 20 percentage losses ever.
You took my fun fact for the day.
Oh, sorry, I didn't even have it
No,
in
I'm
front of me.
joking, but that's all over the place, right?
Yes, it's the biggest points loss. However, we're talking, when you're talking about 1,800 points out of 19,000, it's a bigger deal than out of 26,000. I think we were nearing 27.
Right. Exactly.
So you shouldn't run. You
No.
shouldn't cash out all your investment accounts.
No.
You shouldn't put money between aluminum foil on top of your refrigerator right now.
Right. Exactly. Look,
Because you talked about it so many times. 7 to 8% growth year over year is what the average is, what history tells us. So we would have been stupid to think, what are we at, like a 20% right now? Or are we even higher than that?
26 since the
26
election.
since the election.
Yeah.
So that was always pretty
Sure.
unrealistic.
Look, all
Long
these
term.
news outlets and everything are, for the past 6 months have been going, hey, we're poised for a correction. We're poised for a correction. That's almost like saying, hey, it's going to rain in the next 2 weeks in Lafayette. We
know that's
We know
happening.
that.
Yeah.
That's not so. We actually take advantage of these corrections like this. I love rebalancing is a big deal, right? If you don't know what that is, call your advisor, right? It's a great time to sell some of the things that really take those gains and reposition them in things that maybe aren't doing so well. Interest rates are on the rise. That has a big deal to do with this. Contrary to what people think, the economic outlook being so good has an effect on this. With interest rates leveling off and increasing, people are kind of flocking and wanting to get to those more stable types of incomes and things like that. So we're expecting the Fed to raise rates a little bit more. Hopefully, they're kind of pulling back on that now.
Yeah.
But it is still exciting. And look, let's take this as a lesson. You don't lose money unless you sell. I like to use the house analogy. It is my favorite. We don't know. There are so many variables. They don't mail you a value of your house every day. And you can't see it on the news. But your house valuation fluctuates, whether you think so or not. But at the end of the day, in 20 years, we know what? That your house is going to appreciate. Maybe school zones. Maybe they didn't cut the grass in the park and it decreased the value of your house a little bit. There's so many variables. And that's the example we like to use in the stock market. You're not going to go sell your house or take out a home equity loan just because, there's 5 rentals down the street. You weather it out and you stick to it.
So we've been hearing day after day, essentially, really anytime the president's in front of a camera, directly relating the economy as a whole and the performance of the stock market. And that's not necessarily true. The stock market is never an ultimate indicator because we have jobs numbers, which are good. We have unemployment, which is down. We have so many other metrics, which are real, tangible things.
That's a great point. There are so many variables and look, the Dow is not the one that we really like to look at. The S&P is made up of a lot more companies, and, you're talking international, those two developing markets and emerging markets, that's a big factor in everything too. So it's not just what happens in the United States, but those variables, no one ever knows why the market does what it does.
Yeah.
It just does.
And a lot of things are out of your control.
Right.
There's I'll tell you this, a success story with this, and you talked about home prices. We bought a house in Atlanta when I lived there. Over the course of the 3 years that we had the house, a massive 700-acre park was announced at the end of my neighborhood. That's something we couldn't control and we didn't know, but it happened. Now everyone wants to be here, and property value skyrocketed.
Right.
You just never know. They could have just as easily put a dump right there.
Right. Exactly.
And then the property values would have dropped out. You
right.
know? So I think I know the answer to this, but is there a value, a percentage, a points loss that you would say, yeah, guys, get out, take it all and run?
These corrections, believe it or not, annually, we have no problems with seeing an 11 to 17% correction. So it is very unlikely. And look, getting out, that's when you lose. Let's make something clear. That was my point a while ago. Mm-hmm. You only lose if you sell. So no one's saying, I lost $15,000 in my 401k.
Yeah.
No, if you don't sell it and put it in cash, you don't lose anything. So that's a big misconception about. And look, we are literally back to January 1 growth. So that's all you lost was the growth from January 1 to now.
Mm-hmm.
5 weeks. So it's not. Trust me, this is not a panic moment. This is a great moment to.
Because we're still on the up. We are still on the upswing at this point.
Absolutely.
How much would you ever start to get worried with the percentage if we dropped another 5,000 points?
Look, it's going to depend on every individual's plan that I work with. If you're 5 years from retirement, I'm going to treat that much differently than if you're 30 years from retirement.
Yeah. Great information. You
Don't
got anything
panic.
else on your paper?
Don't panic. Don't panic. No, you took them all.
Okay,
you took them all.
I just blew them out. Okay.
Yeah.
Well, you came on a perfect day. Obviously, a lot of people are talking about the stock market, talking about investments, looking at things. At the end of the day, it's a huge gamble. However, looking long term, if you're not trying to put money in right now to take out 6 months from now, year over year, we have the 7 to 8% growth, and it doesn't look like that's going to change.
Right. No time in the market. Nobody knows.
Chad Romero, the Tuesday Talker. Thanks
Thank
for coming
you.
by.
Thanks.
Simplifying it for us.
Yeah, I hope.
Stay the course.
Stay the course.
Stay the course.
And
All
you
right.
look great in that 80s montage.
Thank you. I wish I had some headphones.
Oh, my
I could hear
goodness.
It.
Next time.
I'm going to be
Yeah,
jamming
next
with
time.
y'all, too.
All right, it's 7:48 on Acadiana's Morning News. We're back next.